We as people, as investors, consumers, voters, buyers, community members, we do have a lot of power around these issues. And there's a lot that we can do to get involved and make our voices heard. And so I think that idea of shareholders playing a really active role in their investments is going to continue to be, I hope, a really big positive trend.
This is the future of finance. Hi everyone, welcome to the future of finance. I'm George Dyer, and today we have Claire Quigley from Ethic on the show. One of the things that we work a lot with our members in the Intentional Endowments Network on is how boards and investment committees can actually focus in on the social and environmental issues that are most financially material to their investments and also most important to the institution. Some themes are so big and impactful that all investors need to really be focused on them, like climate change and extreme inequality. But in addition, some investors have specific priorities that align with their mission or culture, like sustainable agriculture or health and wellness, or a whole host of other social and environmental goals. And Claire and the team at Ethic have a really cool model of surveying and facilitating learning to help boards and stakeholders reach consensus on what's important to them. And then they use their extensive data systems to customize passive public equities portfolios that align with those goals, as well as the risk return objectives of the institution. So we talk about all that, as well as their proxy voting practices and the state of the field in general. It's a very cool company and an interesting model, and Claire was a great guest, so I hope you enjoy it. Hey Claire, welcome to the podcast. How you doing?
I'm good. Thank you, George. Appreciate the invite. Excited to be here.
Yeah, really nice to see you. Where do we find you today?
So I'm dialing in from our first Ethic office in Tribeca.
Oh, wow.
Yeah, we originally had this space when we were around 20 or so people, and then we outgrew it, but we kept the space and we've converted it to a studio. So.
Oh, very cool.
Yeah.
Nice. How big is the team in New York now?
So we have people all over the place. For the most part, we're in New York, and the team today is around 80. Yeah.
Nice. Awesome. Very cool. Well, just for our listeners, why don't we start by having you share a little bit about what Ethic is and what you all do?
Yeah, absolutely. So we are an asset manager. We are entirely focused on sustainability and values alignment. We were founded in 2015, really with the goal of accelerating that global transition to sustainable investing. And that remains core to everything that we do today at Ethic. So we manage around $6 billion in passive equity for the most part, and we create portfolios that are super personalized to our clients' values as well as their financial goals.
Awesome. And how did you get involved? How long have you been with Ethic, and how did you sort of find your way to sustainable investing?
Yeah, so I don't have the most, traditional finance background. I joined the team 5 years ago. So I was very lucky to join the team when we were around 20 or so, 2 months before the pandemic as well. But yeah, I studied creative writing, urban studies, and French as an undergrad. And then my first role out of college was I was doing market research for institutional investors, and I had one project that was called SRI investing at the time. So as you know, we've gone through quite a few names for the space that we work in, but I was just totally hooked on the concept. It was entirely new to me, and I think still a bit new to the world. But everybody that I spoke to around SRI investing, ESG investing, they were super passionate about what they were doing, and I was totally hooked on the space and the concept. I found Ethic just through research on the industry, and I got really lucky to join at the time that I did.
Nice. Had you been interested in sustainability and environmentalism before that, or sort of what really hooked you when you learned about this space?
So I think just inherently, sustainability was really kind of more to my being, if you will. I credit a lot of that to my mom. I think I grew up really thinking mindfully about kind of how we consume, and I think the footprint that we're leaving. My mom composted on a pile of dead leaves in the backyard, which was, pretty, I guess, early for the time. But yeah, I was super passionate about it. I think nature is medicine, and I love being outside, and I love to go thrift shopping, and I feel like it was the way that I was kind of living my life. And to then find out that there was a way that I could actually take some skills that I developed and make my career focused on that was really just a welcome surprise.
Nice. And so tell us a little bit about Ethic, like the types of investors that Ethic works with then. You said about 20 billion under management, most with passive equities. And is it individuals, institutional? What's sort of the range of investor types?
Yeah, so we're 6 billion under management. Just to clarify, we will be at the 20, soon enough, day now. But today, I work with our institutional clients. So I'm a client portfolio manager
Hmm.
for that institutional channel. And so that's mainly OCIOs. So we're working with investment consultants and their clients who are the asset owners. And those asset owners are typically mission-driven organizations like a nonprofit or a foundation, high net worth individuals and families, as well as endowments. So museums, higher education institutions, those are the types of groups that I'm working with. But then
Hmm.
as a whole, Ethic works as an intermediary with advisory firms, multifamily offices. So we have a few kind of different client segments, but I'm really focused on our institutional relationships.
Nice, nice. Well, and as you know, with the Intentional Endowments Network, that's the
Yeah.
space where we're most often working too. And I know that you all have some pretty cool ways of helping those groups, those boards, sort of build consensus and kind of, as you say, like customize what's important to them. And that's something that we help our members kind of navigate quite a bit as well. So I'd love to hear more about how Ethic does that and what that kind of process looks like.
Yeah, totally. So core, when I say core, our main focus is passive equity solutions. So that's still kind of our core business today. And there are really three key avenues of impact that I think of in terms of how we're working with clients at Ethic. So first is your more traditional exclusionary screening. So we're divesting from companies with negatively impactful business practices around the issues that a client might care about. The second avenue is more positive sustainability integration. So in that case, we're investing in companies that are behaving, positively, again, according to whatever issues that specific client cares about. And then the third avenue is shareholder engagement. So we are doing proxy voting across all of our accounts, aside from a few exceptions. And we're also really focused on innovation around investment stewardship, working to be kind of more proactive with how we're helping clients get involved in some kind of larger proxy voting conversations. So those are the three kind of solutions, I'd say, or approaches that we're taking to impact across portfolios. But in terms of how we're working with a client, it really depends on kind of where they are in their impact journey, as I like to call it.
Mhm.
So I can give you an example of each if that would be helpful. But let's say we're working with a multi-generational family.
Mhm.
They think they know that they care about values alignment. They're not really sure where to start. So what we'll do is we'll actually send them a survey,
Mhm.
and we have it's called our values mapping exercise. And really, the idea is to get people thinking about what are their values and how could we like practically apply that to an investment solution. A concept that is pretty new to just kind of the average investor. And so we're asking questions like if you could wave, a magic wand to fix a defining issue of our time, what would it be? But the goal there is to get everybody's individual input, get everybody around a table, these days more often on Zoom,
Mhm.
but really kind of like aggregate those individual opinions, play back the results, pull out some patterns, get people talking and thinking about, wow, I didn't know that you cared so much about that. Maybe that's something that I should be thinking about more. And then from there, we kind of have that cohesive impact strategy mission statement. And that's the framework that we're going to use to look at their historical investments, their current investments, but also the framework that they're going to apply to future investment decisions.
Yeah, I think that's what's so cool about the process is because I think people maybe just assume, or when one doesn't really think about it, it's like, oh, this is an institution. It must know exactly what it cares about, what its top priorities are. But really, these are people. People
Yeah.
come and go. Board members come and go. I mean, a little different with families, maybe, but a lot
Yeah.
of higher ed institutions, the what's important to the students versus what's important to the president versus what's important to the CFO versus what's important to each individual board member can be pretty different. So this really helps kind of surface all that, right, and foster a conversation around how they can build some consensus on what's important to them.
Totally, totally. And it's really what's important, like the most that we know about a client. So let's say, like to your point, if we're working with a group of stakeholders, who are the key decision makers, we can do a lot of interesting kind of weighting of priorities depending on the roles that people play within the organization, within the institution. We can take a lot of that work that I think sometimes is very intimidating to people in terms of wanting to get started. And we can really help with that facilitation of the process. So we play that role of kind of guiding it along. The more perhaps historically challenging aspects of the conversation, like we are used to facilitating that. So it's really great for us to kind of play that extension of an investment consultant team and an advisory team, which is, yeah, really fun to do as well.
Yeah, I was going to ask about that interplay too, because for folks who might not be so familiar, oftentimes endowments or other asset owners will have an investment consultant that really advises them and helps them select investment managers and develop their investment policies and all those sorts of things. And as you mentioned, a lot of endowments also use outsourced CIO firms that kind of pool a lot of those from different clients. So you come in and work with both kind of the consultant and the asset owner. You're sort of a third party in that dynamic that can help foster these conversations and build that consensus.
Yeah, totally. So we're kind of an extension of their team. So they'll really tag Ethic in for their clients, and we'll really help all the way through from that early, values mapping, decision making, all the way through the actual implementation. So that's kind of the second example of a client that we might work with. So let's say a client has a super well-defined set of requirements. So they have, an investment policy statement that very clearly lays out exactly what they're supposed to be doing with their investments from a sustainability perspective. Then what we'll do is we'll actually go through any materials that we can get our hands on, frankly, with kind of a fine-tooth comb. And then we'll pull out what are the relevant themes that we can then kind of map back to the ethics sustainability model. And from there, we can do kind of that translation approach. It's more so, okay, you know exactly what you need to do. We'll meet you where you are, and we'll make sure that you're really kind of covered investments perspective in terms of what you're looking to do with your existing kind of mission and values.
Yeah, let's talk a little bit more about that, like the actual implementation and how you help, put those policies into practice. What does that look like when you kind of customize these portfolios?
Yeah. So to give an example, let's say we're working with a foundation who's super focused on animal welfare. That's their sole kind of cause that they're focused on. So we'll review like their public website, their historical grant making. We'll see that they're active in animal rescue, maybe local shelters. We'll then review their existing investments through the lens of that one issue. And what we oftentimes see is that, unknowingly, this foundation that has been around for however many years has been invested in an ETF. And within that ETF, one of their top holdings is a company, a global brand that has made, zero to very little effort to remove cosmetics animal testing from their business practices. So those are the kind of like red flags that we'll find for clients, and then we'll show them, here's where we are today from an alignment perspective, and here's like how much better we can get based on the data that Ethic has around the companies that you are currently or could be invested in.
Nice. And then how does that translate? I mean, I know you said it's the strategy are largely passive equities, but I also saw in some of your materials that you help people get in, and implement this across asset classes. So how does this sort of show up in other asset classes?
Yes. So I'd say we're definitely most focused on passive equity. So think like single name public equities, ETFs, mutual funds. We're most focused on that space because of our data stack. So we have developed like a super robust approach to data that allows us to take a single company and map like thousands of data points to that company, whether we're looking at emissions data, policy assessments, controversies, business revenue data, across from a variety of providers. And we're actually working with like the raw data components from those providers rather than aggregate scores. So that data, that approach to data is what enables us to be so strong in public equities. These days, we are broadening our focus, to your point, to fixed income, other asset classes, mainly fixed income, because that data stack enables us to assess bonds. So to kind of break that down, our clients are usually getting bonds through like mutual funds or ETFs, which bundle bonds from different issuers. Our data stack enables us to assess bonds issued by corporations because it's pretty similar to assessing a stock issued by a corporation. So we're basically applying that same data that we have currently available to that type of asset class for clients. But when it comes to like municipalities or sovereigns, it's a bit trickier. We don't quite have the data stack currently that we think is, required to be able to make informed decisions from a values alignment perspective. So that's what we're doing on fixed income. And then we're also doing a bit of work on the private side. So we have a team that's really focused on positioning nature as an asset class, which is super cool to watch from the sidelines. So what they're doing is they're actually financing like large scale restoration and conservation projects. And they're using kind of a range of revenue models to be able to monetize those. Still pretty early stages, but very exciting to see where that'll take us.
This episode of the Future of Finance podcast is brought to you by the Intentional Endowments Network and our new Endowment Impact Benchmark, which is an exciting new initiative helping endowments and foundations measure their progress on sustainable investing. Participants receive expert feedback the ability to benchmark against peers, and earn recognition for their leadership. If you're at an endowment or foundation that is ready to advance its sustainable investing strategy, or if you want to benchmark your progress against the field, or if you're looking for a credible way to show your stakeholders that you're taking these issues seriously, learn more and join the 2025 cohort at endowmentimpactbenchmark.org. How do you all think about, I mean, this is sort of like the perennial question in the space around financial returns. And how do you think about these issues in terms of, you've talked about how your models and your data can help clients think through values alignment and what's important to them. And sometimes that's just what they care about more, and the returns maybe are secondary. But for most of the institutional clients that we work with, it's, the returns are primary, and that mission alignment, if it can come along with it, that's great. And oftentimes there is that actual financial motivation that these are real risks, material factors that drive financial performance. So how does your model kind of factor that in? Does it depend client by client? And how do you sort of translate and communicate that back to the clients?
Yeah, totally. So, I mean, our philosophy, if you will, is we don't really see, I guess, values and financial motivations as these kind of fundamentally separate things that I think people oftentimes maybe fall into that way of thinking about it. We think that you can achieve values alignment by balancing those financial and like impact motivations simultaneously. We really upfront will work with the client to define, where does ethic fit into your broader portfolio? And this is a passive equity solution. So what is your risk tolerance? And from there, once we've defined that risk tolerance, that's really kind of the first step. We'll set up the sustainability approach according to that risk tolerance. So it's kind of a spectrum. So if we have clients that are super, super risk averse and they want to very tightly track the benchmark, then we're going to assess companies perhaps a bit less strictly across a variety of issue areas, because we need to have, a bigger investable universe to be able to track the underlying index. We can't be as strict across the issues. On the other hand, we have lots of clients who are very, very impact focused, and they're comfortable drifting a bit further from the benchmark. And in that case, we kind of dial up the strictness, the stringency with which we're assessing companies, and then that will bring out, a wider risk tolerance, but you'll see greater returns from an impact perspective. So it's kind of a balancing act that we're striking with clients, but, in our opinion, like, values is just another characteristic that you're looking at within your investments. So we really don't think of it as being kind of like a dichotomy between the two, but instead taking it all in tandem as just another characteristic, another value that you're looking at within your portfolio to become more aligned with your kind of broader goals outside of just the ethics sleeve.
Yeah, that makes a lot of sense. I was going to ask about tracking error and benchmarks, and it sounds like it kind of varies client to client and how you set it up.
Totally varies client to client. And that's where you can think of ethic again as that kind of intermediary. So we're partnering with that investment consultant who has a view of their client's broader portfolio aside from just the ethic piece. And so they're doing a lot of that guidance, and we're helping them think about this specifically, how it relates to the ethic portfolio. But really there are kind of like three key motivations for our clients. It's minimizing tracking error to the benchmark, maximizing sustainability, mission alignment or impact. And then the third is tax management. So that we take that direct indexing, passive equity approach, which really provides a lot of opportunity for realizing tax losses, which is a huge benefit of our solution as well.
Nice. Interesting. And then the other piece I was going to ask about with passive strategies, often an attractive component of that is low fees. And I'm just curious, with this sort of almost advisory component that you all do, does that affect the fees at all, or is that just part of the package? How does that all work compared to other passive products out there?
Yeah, so because I think we're taking this kind of more hand-holding approach, it's a bit more consultative from a sustainability perspective. Our fees are a bit more than you'd see for the typical like passive ETF product, but that is all kind of dependent on the client that we're working with, the partnership, whether we're working with a large investment consultant or just like a one-off opportunity with a client. And we're very kind of conscious of, we want people to be able to do this. Like, we want everybody to be able to think about sustainability and values alignment within their portfolios. And we do not want fees to be a hurdle to getting them involved in this. So that's always kind of my philosophy. Not being on the finance team, maybe I should check with them before. That is my approach to signing new clients. But That's usually what I like to think about. Like we want people to be able to get involved, especially those who are passionate about this. So always trying to like meet clients where they are and find a solution that works for everyone.
Yeah, gotcha. Nice. And how are you all thinking it's sort of hard to avoid or not think about in some ways this sort of pushback in the space that we've been experiencing for the last couple of years around some of the anti-ESG campaigns? And are you seeing that influence how your clients think about this or how you all think about it?
Totally. Yes, to your point, very hard to ignore as much as we might want to. Um, the way that we're thinking about it, I mean, especially with the new administration, is I think we anticipate a set of new challenges as well as new opportunities. So I think like as a whole, I try to remember that we have, been here before.
Hmm.
Um, and, a few examples after the 2016 election, as well as the pandemic, kind of two periods that I think of as, unprecedented, challenging times, perhaps. And we actually saw that a lot of investors were really motivated. They were motivated by government behavior or perhaps like a lack thereof, and they were turning to find impact within the public markets instead.
Hmm.
So it's kind of like another avenue for people to be able to have impact on the causes that they care about that affect their daily lives. It gives them a sense of, I think, control and involvement, and it can be really motivating during these times. That's what we've seen, and I think that we will see something very similar over the next 4 years and kind of in the wake of some of the anti-ESG language that we see really surrounding us these days. I mean, of course, a lot of the stuff that we're seeing is disheartening, but expected. The withdrawal from the Paris Agreement is top of mind. I think we'll see some changes with the SEC in terms of their enforcement or how they're thinking about disclosure requirements from public companies. So emissions
Hmm.
data, climate related risks. I think that could impact the data that we're getting from public companies. We'll see how that shakes out. The other thing that we're seeing, I think, is pressure around like public pension plans in terms of how those are invested by state and federal authorities.
Hmm.
That's not really relevant to us. The vast majority of our clients are private clients.
Hmm.
But that is another kind of trend that I think we're seeing in the space.
Yeah. Yeah, we definitely saw it last time with a more motivation from a lot of people who recognize the challenges that these issues represent. And so, yeah, hopefully we'll see that kind of, and we're seeing some of it already. I mean, this probably won't come out for a little while, but just saw governors of about half the state sort of reaffirm their commitment to the Paris Agreement
Yep.
after the federal administration's withdrawal. So, yeah, I think some of these subnational groups and investors included can continue to have really important impact. And as we know, the risks around these issues and the opportunities aren't going away. Like that hasn't changed. So it's still really important, I think, for investors to keep this stuff front of mind. And I know at least some of them will. And I think a lot too, I think a lot of it is a little political theater and people sort of positioning, maybe repositioning how they talk about some of these issues, but continuing to recognize that they're material.
Yeah.
Hmm.
Yeah, I mean, we feel very well prepared to kind of meet the changing environment. I think major kudos to our team who designed the sustainability model, which was designed like inherently to evolve with the industry, to evolve with new data, new what issues are particularly salient to clients given the environment. We also like update our data on a monthly basis. So
Hmm.
we're monitoring changes in company behaviors. That's particularly top of mind for me, given
Mm.
some of the rollbacks that we've seen around DEI in particular. So we're able to really kind of hold these companies accountable for how they are actually behaving as it relates to these issues rather than what they are perhaps claiming to care about in the future, in the distant future. We're saying like, let's see what's happening right now because that's what our investors care about.
Yeah, that's great. And talk a little more about that. You mentioned the shareholder engagement aspect of your work. How does that show up? Is it mainly proxy voting or is there direct engagement that you all do with companies as well?
Yeah, so mainly proxy voting. So
Hmm.
we have like an internal goal of voting proxies on behalf of all our accounts. So the way that we do that at scale is we work with institutional shareholder services and we
Yep.
vote according to their SRI policy guidelines.
Hmm.
So we have kind of a blanket approach to proxy voting across all of our accounts.
Hmm.
On the more proactive side, we are still, I think, kind of in an early stage of developing a scalable approach to shareholder engagement. We partner with As You Sow, big fans,
Hmm.
as you know. And we actually recently onboarded a new team member who is going to be entirely focused on innovation around investment stewardship and shareholder engagement. So we want to get to a point where we're being kind of more proactive about helping clients like raise resolutions at scale,
Yeah.
and be more involved in a lot of that decision making. Another thing that we've rolled out in the past couple of years that has been very well received from our clients is impact reporting, but for proxy voting. So
Mm.
we're actually sharing like at the portfolio level, here are all of the votes that we have that you've been involved in for your portfolio. Here's why we voted this way. So what is the voting rationale? Here's what the outcome was. So really giving a lot of transparency around what they've been able to achieve from a proxy perspective, because we
Hmm.
think that's another, very important avenue for having impact.
Yeah, definitely. And that transparency piece is great too. On the guidelines for proxy voting, can clients provide their own if they sort of want to go a slightly different direction on certain issues from the ISS guidelines?
So not today from the ISS guidelines,
Hmm.
just because that is really kind of the best way for us to be able to do it at scale. But I think the idea with the more like proactive shareholder engagement is that you'll have more flexibility at the portfolio level. So
Yeah.
we've been doing that kind of ad hoc, client by client, just because it requires so much more involvement. But yeah, I think ideally, I'd love for you to maybe spend time with Austin, our newest team member, who has a lot of really great experience in the space. So we're super excited to see kind of what's in store this
Yeah,
year.
that's awesome. Very exciting. And just kind of coming back to some of the context we were talking about in the US, do you guys work exclusively in the US or in other countries? Or...
Yeah, for the most part in the US.
Hmm.
So we have, a few clients here and there abroad,
Hmm.
but we are, yeah, mostly focused on the US. We are, a startup by nature. So we most recently raised a Series C a couple years ago. So we've raised 100 million in venture capital to date. So I mentioned that because it really enables us to kind of always be looking in the future in terms of what are the exciting things that we can do one day.
Hmm.
So I know that global expansion is on the radar, but
Yeah.
definitely in the near term.
Nice. Well, yeah, and I just asked because, as we think about some of the conversations happening here in the US are very different in other parts of
Yeah.
the world, and investors across the globe are continuing to move forward and markets are being responsive to that.
Yes. Yep.
Yeah. Nice. Nice. Well, Claire, this has been great. A couple just kind of wrap up questions. And
Yeah.
one is just directly along the theme of this podcast. What is as you think about all this work, what is your vision for the future of finance and where we go from here?
Yeah, I know we've talked about transparency a bit today. I think that that needs to stay like a top priority. I think these products need to be transparent and evidence-based. I think we need to be holding companies accountable to being transparent about how they're contributing to these issues positively, negatively. I think that the progress that we've made around enforcing anti-greenwashing has been great, and I think that should continue to remain a priority. The other thing that I am thinking about a lot, especially as of late, is really prioritizing companies that are really moving the needle on DEI outcomes. So not necessarily kind of promises around policies or hiring goals, but really how are companies creating an environment that provides really like equal opportunities to thrive. So we're looking at that in terms of equitable benefits, flexible working schemes, daycare policies, really the things that affect like the everyday environment at a company. So I think that's going to continue to be really, really important. And then the other thing I think is really kind of, again, in that line of like shareholder activism. So I think that that's going to continue to be a huge, huge trend. And I think it's important to remember that like we as people, as investors, consumers, voters, buyers, community members, we do have a lot of power around these issues. And there's a lot that we can do to get involved and make our voices heard. And so I think that idea of shareholders playing a really active role in their investments is
Hmm.
going to continue to be, I hope, a really big positive trend.
Yeah.
Yeah.
Yeah, I think so. I mean, I think it's something that people often lose sight of. It's just the influence that finance can have as literally as owners of these companies.
Yeah.
And, coming back to that whole sort of values or mission and financial performance alignment, as we move forward into the future, facing all these sustainability risks, these environmental and social mega challenges, I really believe that those companies that are better suited to address those and provide the solutions and avoid the risks are going to do better financially. And so, I think investors have every reason to be pushing those companies to do better.
Yeah.
Nice. And then you talked a little bit about your path into this field and your role at Ethic. For others that might be just learning about sustainable investing or seeing the potential and impact in this space, what kind of advice would you give them to chart a career here?
Yeah, I would say stay curious. So, subscribe to podcasts, this podcast, newsletters, follow people on LinkedIn, connect with everyone. Like, don't be discouraged by the headlines and the news, but stay motivated and curious because there's a lot of great news and great things happening in the industry that I think sometimes gets maybe a little bit buried by the scary headlines. So yeah, I would call that out. I think Grist is a great publication that focuses on solutions-based approaches and climate news. I love the newsletter Breaking Good from the Case Foundation. That's a great one.
Nice. I don't know that one. I'll check that out.
And I found Ethic through a newsletter. So just another plug there. I think it's great to just be subscribed to this stuff.
I love that. Yeah.
Yeah.
It's a great point. And you're right. There are so many exciting resources out there and so much good work going on. And I couldn't agree more on the headline piece. I mean, this was of the anti-ESG stuff. We saw it start to bubble up, and it was very clearly a coordinated media campaign, and it's been very effective. Those well-funded coordinated media campaigns are very effective. So there's no doubt, but it can sort of distort reality a little bit. So that's a great point.
Really. Yeah. And then the other piece of advice I'd give is I think the second time I brought up my mom today on this podcast. Another piece of advice from my mom, which is to tend to your own garden. So that's something that I'm always reminding myself, particularly when I am spinning out from some, scary headline. Take a nature walk, literally go hug a tree or touch grass, even in the park in your city. I think it's important that we all practice mindfulness where we can, and take care of ourselves so that we can then take care of others and come together to really kind of focus on solutions, and especially around a lot of these kind of defining issues of our time. Yeah, take care of yourselves.
That is great advice. Your mom sounds awesome, and couldn't agree more. Getting outside always helps.
Yeah.
Great. Well, Claire, thank you again so much for taking the time to have this chat, and encourage people to check out Ethic and be in touch. And thanks for all you do. Hope to connect again soon.
Of course. Thanks so much for having me. Thank you, George. All right. Take care.
Thanks for tuning in for the Future of Finance podcast. We hope you found today's conversation insightful and inspiring. Don't forget to subscribe or follow us on your favorite podcast platform. And please take a moment to rate, review, or share the show. All of this really helps us to reach more people like you who care about creating a thriving and sustainable future. And it's a really easy way to have a big impact. So please do follow. A quick disclaimer, the content of this podcast is for informational purposes only and does not constitute investment advice. Investments and strategies discussed may not be suitable for all listeners. Please consult a financial, legal, tax, or accounting professional before making any investment decisions. References to managers and funds are for informational purposes only and should not be considered endorsements or investment solicitations. This podcast does not monitor fund performance or guarantee the accuracy of third-party materials or statements. This has been an episode of the Future of Finance podcast, exploring how finance can shape a vibrant and sustainable future. Thanks for listening, and we'll see you next time.